Hello, everyone. Thanks for joining and welcome back. Our guest today is Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence. Welcome back, Mike.
Hello, Ivan. Thanks for having me back.
Yeah, thank you so much. It's been a while since you've been on, so I wanted to get you on to talk about everything that's happening in the markets. A lot of concerns, a lot of speculation, a lot of stuff that's even in precious metals, of course. Like since we've last talked, precious metals has been going up tremendously. You're looking at gold, you're looking at silver, 13-year highs. What is happening right now in precious metals? Why are we moving like this, Mike?
Well, they're all basically going up on the back of gold. Um, Good example is silver. Silver and gold are both up about 45% on a 1 year basis. Yet silver is known as the devil's metal for a reason. It's leveraged gold. It typically trades two times the volatility. On a risk adjusted basis, it should be up 90%. But that's what's happened. Gold's pulling everything along with it, particularly platinum. In May, I think that gold platinum ratio reached the highest ever, and platinum just kind of catching up as we're seeing that responsive buying. So everything's bottom line because of gold and because central banks are buying gold. And now ETF buyers are significant buyers of gold. The ETF total inflows have jumped up today as we speak on September 10th to the highest since 2023. It just got above that high from there then, and that's after 4 years outflows. There's a significant inflows into gold, central banks buying, and then everything I think about gold is just nothing but bullish. Obviously, that's kind of the fear when it's nothing but bullish. What stops it? And like, the way I like to phrase it is every time Mr. Trump speaks, gold smiles. And then, of course, there's those geopolitical things happening with wars escalating. I'm very concerned. So for now, as we speak, it's up 40% in the year. About the last time was up more than that was 1979. CPI was running 10%. Now it's below 3%. So the key thing I want to end with. Ivan, is just how we end this year. Right now, gold signaling there's major cracks in the global financial system, potentially major cracks in rapidly advancing risk assets. And I'm hoping we can get through this year without stock market volatility picking up just a little bit like it usually does.
Yeah.
And I think gold's anticipating that we're going to have some normal volatility pickup in the stock market.
Hello, my silver and gold bugs. I just wanted to say thank you so much for watching the video. Hit the subscribe button, hit the like button, and also hit the notification bell so you don't miss any future uploads. Back to the video. What are your thoughts on, interest rates? A lot of people have been talking about, it being lowered 25 or 50 basis points. Do you think that's a good move right now with where inflation's at? Do you think it's a bad move? What are your thoughts?
Well, inflation was much higher in 2007 and early 8 when the Fed started cutting rates because of cracks in the financial system. The bottom line is unemployment rate is ticking higher, jobs are ticking lower, and all measures, not just the government data, which is somewhat dicey now because of what Trump did by firing the BLS leader but ADP data is negative. Employment claims from the states are all tilting downward. So I think that's part of the recession that's kicking in. Now, of course, we've had this significant downward revisions in payrolls, and people have heard this from people like me before that, yeah, I was looking for a recession. My comic economics team was thinking next recession almost 2 years ago. It didn't happen. It's the delayed reaction that I'm most concerned about, particularly as we have a major discombobulating force, most in my lifetime, of Mr. Trump hitting hard on tariffs in the rest of the world. I mean, this has shifted the post-World War II order. So the rest of the world's seeing that, particularly in China. And you started with yields, and right now, as we speak, that 10-year note yields at 4.06%. The high was around 4.80 on the year.
Hmm.
Just a week ago, the high in the 10 and 30 year was 5%. And I think the guide to look to where U.S. yields are going is look over at China, second largest economy. Its 10-year note yield right now is 1.82%. Severe deflationary forces in that country, and they're trying to export that deflation to the rest of the world, partly because they can't export it to U.S. anymore as much. So I think we're heading towards a normal recession. And the bottom line for everything is none of this stuff that I just said to you really matters until the U.S. stock market starts backing up. Because right now we're almost 2.3 times GDP, market cap to GDP, about $70 trillion. And GDP is 30, maybe a little bit above that. That's the most on an end of year basis since 1929 when Herbert Hoover was elected. So I'm afraid that Mr. Trump might just have the disadvantage of poor timing. The stock market's so expensive. We're looking for normal reversions there. And I've seen the indications from gold, certainly gold outperforming most risk assets like Bitcoin and the stock market. And I think the next big trade will be indicative of is what gold's anticipating normal deflation. I said deflation from inflation, which is normal, and that's why I think U.S. long bonds might end up being some of the next big trade. But bottom line for that is U.S. stock market has to go down a little bit, volatility pick up, and I'm prepared to get stopped out on that call by the end of the year if that doesn't happen.
What are your thoughts right now on people getting into precious metals? Is it too high right now? Is it a speculative bubble that we're in, or do you think it's still a good time to get into gold and silver?
Yeah, that timing can be very dicey. It's difficult, but I think as far as first put some numbers on it. As we speak, it's gold's 3,653 dollars an ounce. That old high at 3,500 is now support. Old high is now probably old resistance, probably now support. I think the next round level is 4,000. How much higher it goes, I don't know. But yeah, bull markets get stretched and shorts getting stretched. But the key thing is I just checked last week is you check for what's happening with the underlying market. First of all, what's happening with future speculators. Hedge funds are not way overweight long like they've been in the past, right? They're around 33% of total open interest. They've been as high as 45% of total interest net long. These are managed money net positions. And if you combine with gold ETFs, massive inflows, and there's a lot of room in gold ETFs. Just get back to the old highs. So massive inflows there, but it's a major shift. So I look at it as a pretty enduring bull market. If I were to buy it here, it'll go down 10%. That's just the way my life works. But I think as far as responsive investors, it's a bull market. I don't give investment advice, but I think the key thing to think about gold here is here's a key risk, I think, for gold for the end of this year. Some significant détente out of Russia, Ukraine, potentially in the Middle East. The U.S. stock market stay on a tear, has to stay on a tear because it's a competition for gold. That's why we've had 4 years of outflow, stock market on a tear. Why buy the rock when stock's on a tear? And high U.S. interest rates. And to me, this is what gold's anticipating is a potential reversion in that very expensive U.S. stock market. The VIX right now, as we speak, is 14.66. The average for the year is 20. And it actually has been going higher. It's just very low right now because we're still somewhat in a summer doldrum period. So I think gold has a lot more room to the upside. I don't think it, on a significant correction, it might get near 3,300, but 3,500 is first support. I think the next round number resistance is around 4,000. As far as timing, the bottom line for gold to really accelerate will be if the U.S. stock market rolls over. I should say when, because it's just when. I just hope it's in my lifetime. I think it's going to start this year. And that'll kick in the deflationary forces that you're seeing in China. And potentially maybe in Germany and a lot of the rest of the world's cutting rates because they see what's coming.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use, so instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Do you think if there is some downturn in the stock market, would it be a wise move for people to take their profits now and cut their profits before? Or like, how would you play this if someone is positioned in the stock market, they don't want to see a downturn, they want to, would you take profits now? What would you do?
The bottom line is no one wants to see the downturn. I'll start out with how I started the year. I still expect gold to be one of the best performing major assets this year. That's been working, knock on wood, and you got one right. And I fully expect Treasury bonds to be one of the best performing assets this year. I've been completely wrong there. This is from a guy who started in the Treasury bond pit in 1988. I thought I knew that market well. So nothing like markets to humble you. I've been wrong on Treasuries for 2 years. So I think what's going to happen, my fully anticipate, we're at the stage now. I've seen this. It's worse than it was in 99 and 2007 when stock markets go up and makes everybody get involved, and you have to keep, it's a pile-on factor. And I think at some point when it goes down, it's going to go down real fast initially, and then maybe stabilize because we're so overdue for just hitting some stops like copper did. Copper dropped 20% in a few hours because it got too expensive for silly reasons, and then just runs through things. So I'm afraid the stock market's going to do that. I don't know what the trigger is going to be, But there's certain times you're supposed to be selling when they're yelling. There's this massive yelling in the market, particularly in cryptos, which I see the most froth. And I just been pointing out that Bitcoin to gold ratio has been flat for 4 years. S&P 500 total return has been flat versus gold. It's been unchanged versus gold for 8 years. The Bloomberg Galaxy Crypto Index has been unchanged versus gold for about 8 years. And gold beats everything. If the rock's beating these assets, there's an indication that you probably should be overweight the rock and underweight highly volatile speculative risk assets that are most expensive by some measures in history.
Absolutely. Well, Mike, I want to thank you so much for coming down and speaking to the silver and the gold community. I'd love for them to connect with you as well. Where can people connect with you, Mike?
Well, back on your program. It's good to be back. I'm on obviously on the Bloomberg terminal. On X at Mike McGlone 11 and LinkedIn senior commodity strategist Mike McGlone at Bloomberg Intelligence. And Ivan, it's been thanks for having me back.
Yeah, no, thank you so much. It's a huge pleasure having you back, and we're super excited to have you back on to give us your thoughts on precious metals and of course everything happening in the financial market. But Mike, I want to thank you so much for coming down, and hopefully as the market develops, really love to have you back on soon.
Looking forward to being able to look back at what we're doing now from the future. And I'm so concerned if just a little stock market volatility picks up by the end of the year, that could set the stage for many years. Otherwise, we just keep on this normal trajectory that, yeah, everything's fine. Everybody makes money taking a lot of excessive risk. And we all know history proves those things don't last too long.
Absolutely. Well, thank you so much, Mike, and we'll talk to you soon.
Cheers.
Take care.